Hi, Cindy. Thank you so much for joining me today.
Hi, Risa. Always good to see you.
Always good to see you too. So you're in Puerto Vallarta right now, is that
I
right?
am. Yes, that's
Yes.
correct.
And you've actually been an accountant down there for how long?
Since 2009.
Oh, wow.
So
Wow.
I'm a
So
U.S. tax preparer and accountant, and I work with the American community here.
that's amazing. That's amazing. I think this is one of those things where people don't really necessarily like to talk about it because it's scary and there's so
Right.
many unknowns, but it's so essential, right?
Yeah.
Um, because if you are not aware of these things, you can get into pretty big trouble. Um,
True. Very true. Yeah. That awareness. I mean, we spend a lot of time in my firm educating people because there's 9 million people living outside the United States currently, or something like that. And when you move to a foreign country, you are usually under their tax laws. And people just believe that the U.S. taxes are in the garbage. They don't have to file them anymore. And there's a lot of misinformation with friends, neighbors, relatives, and our best advisor, Facebook, telling them misinformation. And then one day, maybe the IRS sends them a letter, or they get into a transaction where they've got to produce tax returns, and all of a sudden they start finding out that they are not in compliance with U.S. law and panic. So we spend a lot of time with education.
Yeah, no, rightfully so. So before we because today we're going to talk about some of the tax laws that are new and then some that are being enforced, that perhaps in years past were kind of, people could get away with a lot more. Um, and this is not tax advice. We're just kind of having a conversation so people can then go and ask their accountant
Correct.
for what they
Yeah.
should do in their particular situation. Um, but before we kind of get into the weeds on things, what are some of the basic, just like kind of the high level basic things that people um, should know about? Like, what can we clarify for most people who move to Mexico or move to a foreign country? What should they know?
Well, if they're not working, if they're retirees, generally they have no change in their U.S. tax filing. You have Social Security, you have a pension, maybe you have some interest income. Those people, their tax return looks very similar to what it looked like in the United States. The address, the mailing address of the tax return may become an issue because some people, um, if you live, for example, in Mexico, the mail service is not reliable. So we encourage people to use a U.S. address on their U.S. tax return. It's problematic for some people. Other people seem to get mail here. So um, that's one thing. The other thing, if you're just a retiree, and I don't mean just a retiree, but if you have a simple tax return, but you've opened a foreign bank account. The Mexican banks are paying high interest right now. So a lot of people are moving money down here. If you have more than $10,000 US equivalent in a bank account, or bank accounts, aggregate of all bank accounts in foreign countries, you have to file what's called an FBAR. So that's a little bit different than what you would be filing if you were to live in the United States. So that's something to be aware of if you are opening a bank account here. Also, those most banks here pay interest. They collect taxes on that interest, and they pay that tax over to the Mexican government, but you still have to report both the interest and the taxes on your tax return. So there's a few little things like that.
So if you don't live in the US, you still have to file US tax return every
Correct.
year, correct? As long
Yes.
as if you're a US citizen.
If you are a U.S. citizen or a U.S. green card holder, correct. Um,
And then if you move to Mexico, then you're filing two tax returns. You're filing one for Mexico and one for the US. Is that
correct.
right? No matter what?
Well, if you meet certain income limitations. So if you think about the tax tables, every year the IRS issues new tax tables, and so there's certain minimums. So if your income, like if you're a single person and your income's under about $13,000 a year, you don't have to file a tax return. But if it's over that, or if you have, say you have rental property in California still, and you now live in another country, you still have to report that income from the rental property in California. So there are exceptions, there are conditions, but generally speaking, if you're a U.S. citizen or U.S. green card holder, you're required to file your U.S. taxes every year for life. So the United States is one of only 2 countries in the world that requires filing on worldwide income rather than residency. So that is a big surprise to a lot of people when they move, that they do not lose their filing obligation. The only way to get rid of it is to renounce your citizenship.
Oh, wow.
Yeah.
So that's pretty serious then.
So, and people do, but I don't recommend it.
Yeah, no, just so you don't have to file your taxes.
Right.
So talk to me a little bit about some of the changes that are going on, and what should people be aware of, especially if they're thinking about moving to Mexico. Perhaps they're, you know, planning on retiring years down the line, but they want to perhaps, you know, buy an investment property for now. And they want to, you know, get some rental income or, you know, so other sorts of income. What's happening out there that they should be aware of?
Exactly, Risa. There's big changes in the way that Mexico is collecting their taxes in the rental area. So in June of, I think it was 2022, it may have been 2021, they cut a deal with Airbnb, and now Airbnb collects the tax for you on your rental properties. So in the past, many people moved down here and bought investment property, and if they did collect the EVA tax is like a VAT tax. It's a pass-through tax, so it's not an income tax. It's the tax that's collected on short-term rentals. If they collected that, it's a rate of 16%. Not everyone turned it over to the Mexican government. So not everyone has tax IDs. If you're not living here permanently, you may not have a Mexican tax ID. So the Mexican government now has put that burden on Airbnb. So if you have rental property in Mexico, you will be required by Airbnb to give them your Mexican tax ID, just very similar to in the United States. If you're doing independent contractor work and you have to fill out a W-9 for a 1099, or you open a bank account and they want your social security number, same process. You give Airbnb your Mexican tax ID, and then they will not withhold the tax. You will be responsible for filing the returns. If you don't have a tax ID, they are automatically holding, I believe it's 20%. I do want to say I'm not a Mexican accountant or tax preparer, but I work with it every day, and I work with a lot of rental properties, so I'm familiar with the laws. I know what's going on, but don't please talk to your own tax advisors. I'm not here giving tax advice. I just want to make double clear on that.
Yeah, this is for educational purposes. Um,
Exactly,
which is
exactly.
okay. So this is Airbnb, this is VRBO, this is any sort
Any
of.
any platform, yeah, any rental platform.
And so what does that mean? So if I have a property, right, and I want to rent it out, does it affect long-term rentals or is it just short-term rentals?
Just short-term rentals. As far as the VAT tax,
And
you
now,
still have a requirement to report your income to Mexico that's sourced in Mexico. So that's another misconception that a lot of people have, is that they believe that the source of the income is the bank account that the money goes into, and that is not true. The source of the income is where the property is physically located or where you are physically located. So if you're working in Mexico, even if you're working online, your source of the income is Mexico because you've earned it in Mexico. If you are working in the United States, the source of the income is the United States. If your property is in Mexico, the source of the rental income is in Mexico, even if you get paid in your U.S. bank account. You could get paid in your French bank account that you inherited from your mother. It wouldn't make any difference. It's still where the property is located or where you are working from.
Ah, that makes a lot of sense. So,
Yeah,
in terms of this, like Mexican tax ID number, do you need to be a temporary or permanent resident in order to even obtain one?
correct. Yes, you do have to have your temporary or permanent residency to get it. It's called an RFC, and it's the same as a U.S. tax ID number.
So, if you don't have residency, right? You bought this property
Right.
cash, um, so then you just expect Airbnb or VRBO, whatever, to collect the tax and then,
Correct. Yes, and then they send you a statement at the end of the year. Actually, I think they send a statement out at the conclusion of each rental. They send a statement saying what they collected on your behalf, the fees that they took for themselves, the tax they paid to the government of Mexico, and any other fees that are associated with that rental.
so if I have a tax ID, is there a way to save money? Like, can I just do it myself, or Airbnb is required now by law to do it for me?
They're required by law to do it for you unless you give them your RFC number or tax ID number for Mexico. So,
Oh, in which
so,
case then,
so when you sign up with Airbnb or VRBO or any of the um, rental exchanges, they're going to ask you to fill out the paperwork, and the paperwork is going to include your tax ID number of the country that the rental is in. And this is kind of a worldwide thing. This is happening not just in Mexico, it's happening all over the world, as a way for the governments to close the tax gap for money that they're not collecting that they are entitled to collect. And so if you have the tax ID number, you stick it in there. If you don't have the tax ID number, then they will automatically collect. So if you are charging $200 a night for rental property here, they will add 16% onto that fee. They will collect the 16% EVA tax, is what we call it here, and they will turn that over to SAT, which is the Mexican equivalent of the IRS. And then you will get a statement from Airbnb, and you will need to give that information to your tax person, or if you're doing it on TurboTax, you'll need to do the calculation yourself to figure out how much is the rental income versus how much is the EVA tax that was collected versus how much were your expenses. And EVA tax is not an expense. It's like if you go to Macy's and buy a shirt for $100 and they add 9.5% tax. Your shirt's $100. The tax goes to the government. So it's not your expense. It's the same concept. It's a pass through from, you're just the middleman collecting it, and you are obligated to hand it over to the taxing authorities. Whether
well,
you
and
do
so
it or whether Airbnb does it.
so this is starting to get enforced. This was always in place. It's just being enforced now. Is that right?
Right. Correct. Yeah, it's
And
always been the law. EVA tax has always been the law. There is also an income tax component, which I'll tell you. I'll talk about that in a second. But this is a way to enforce it. They did it with all the digital platforms. It started kind of with Netflix, like Netflix Mexico, and then people were using their U.S. subscription to Netflix all over the world, and then those countries weren't getting their fair cut, so they came up with this idea of making the platforms responsible for collecting the tax. And it seeped it then into the rental property as well.
is this something that's going to be starting in 2023? So when you file taxes for 2024, or is this something that we should be aware of moving forward from
No,
now?
it started in June of, I believe, 2021.
Okay.
It didn't really get well known until probably this tax filing season, because a lot of people all of a sudden, were getting their uh, their net amount of the payment from Airbnb was short by 20%. So there's 16% is the EVA tax, and then there's 4%, which I believe they're applying as ESA RA tax, which is income tax. So there's two pieces to it. There's 16% EVA, and then there's 4% regular income tax.
Wow, that's a lot.
Yeah, it's a lot, but again, you're supposed to be collecting it from your tenant.
Right.
So the 16%, not the 4%. So, and if you haven't been, I know it's a real problem because if you've been charging $200 a night for the last year and then all of a sudden now you have to pay an additional 16%, you have to either raise your rents or take it out of your profit.
Right. Right.
And people are just having a hard time understanding why they have to do this now.
Right. Because it's the law.
But they're being forced.
Right. It is, yeah. I think those who have been doing it for a long time probably are in some sort of shock, but they're lucky enough to probably have gotten away with it for many years.
Right, right.
As things happen, right?
Exactly,
So
exactly.
we were talking also before we got on about other laws that are changing, especially when it comes to having any sort of income. Like you were talking about people who teach English. There's a lot of part-timers, right? That
Right,
you have your digital nomads. You have people who just do work on the side, get paid by PayPal or, you know, a
exactly.
number of digital sorts of, remittance platforms.
Yes.
Um, what's going on there?
So in the past, none of the platforms such as PayPal were giving 1099s to people. The law was written such that unless you had $20,000 of transactions or 200 transactions, whichever was greater, you wouldn't not be required to be 1099 from platforms like PayPal. So last year, sometime in 2022, the Congress changed the law, and now those platforms are also in the regular 1099 rules, which are anybody that you pay over $600 or more per year as an independent contractor gets a 1099. That law has been around for years and years and years. Why it wasn't written the same way for PayPal, I don't know the history on that, but that has been corrected. It was corrected in 2022, but not enforced. So for the 2023 tax filing year, it's being enforced. So all those vendors or suppliers or whatever you want to look at them as, depending on who you are. And a good example is what you brought up earlier. I teach English from Mexico, for example. I teach English to someone in South Korea. And I sit in my home office at 5 in the morning and I get paid by PayPal. And I've never been 1099 before. And I haven't been filing a U.S. tax return because nobody's any wiser, or a Mexican tax return for that matter. So now all of a sudden you're going to get a 1099.
Right, from PayPal. So what
Assuming you made
happens? How do they decipher? Like, what if you're getting paid $1,000 for, I don't know, as a gift, or you know what I mean? How does
right,
PayPal know
right,
whether that's income?
exactly. They don't, and that's going to be a mess for the accounting community this coming year because we aren't going to know unless you have a different PayPal account for your business than you do for your personal expenses. There's not any way that can be separated. So what is going to have to happen is you're going to have to provide your tax preparer with a spreadsheet. So say you got $10,000 and $8,000 was a gift from your mom. You've got to tell your accountant that $2,000 is income and $8,000 is gifts or whatever personal transactions it was that is not involved in your tax return. And we don't know how the IRS is going to deal with this. We deal with this a lot on the Form 1099-K, which is the merchant account form, and they send a 1099-K and they give you the amount of revenue every month. They give that to the IRS, but it also includes sales tax. It also includes, if you're a restaurant, it includes tips. So what we have to do is back out those numbers. So I'm envisioning we'll have to do the same thing. We'll report 10,000 on, say, your Schedule C for sole proprietors, and then we'll minus out 8,000 as non-taxable, so that they match up on your tax return, because that's the big issue with the IRS, is that they do a computer match. They match all of those third-party documents, 1099s, W-2s, with your tax return, and if you're short, then they send a letter proposing an adjustment to your tax return. So the way to fix that is to report what the IRS got and then make an adjustment in the tax return wherever appropriate to reduce the amount, with an explanation that this was personal transactions and not income. And we'll see how many letters we get from the IRS next year.
Oh my God. I'm literally starting to sweat. I think thinking about, I'm not even an accountant. I don't have to my accounting is pretty simple. It's going to be huge.
Well,
And
that
people,
is simple. That's the key word. People say that all the time. I have a really simple return. And then, oh, you have foreign property. Oh, you have this English teaching class that you do on the side. Oh, you have, or whatever the business is. And there's another issue also with the IRS. Uh, Speaking of the rental property, this is also not a new form. It's a very old form, but it's part of the decision of what to do with it has just been determined in June of 2023. We may or may not remember the Tax Jobs and Cuts Act of 2017, where a lot of changes were made in the international, or a lot of, not really changes, but enforcement in the international tax world. And one of those was Form 8858. Form 8858 is a report of what's called foreign disregarded entities or foreign branch income. So it was originally designed for, let's say you're a manufacturer in the United States and you have a branch in Mexico that's building widgets. So now your branch income and expenses needs to be reported separately on your tax return. They expanded that in the Tax Jobs and Cuts Act of 2017 to include rental property and sole proprietorships. But there's been a lot of arguing going on with the CPA community and the IRS, and trying to interpret if that's really what they meant to drag those two items in. We don't think that that was the intention of the law, but the IRS came out with formal guidance in June of 2023 saying, yes, we have to report your foreign property and we have to report your Schedule C income on that form. It's a messy form. It requires a balance sheet, which no Schedule C and no Schedule E rental property have ever reported balance sheet items like cash on hand, depreciation, not the depreciation, but the accumulated depreciation, the value of the asset, liabilities if you owe people money, credit card expense, credit card debt, etc. Anything that would normally hit the balance sheet has not ever been in the rental property portion or the Schedule C portion of your tax return. Now it is. It's redundant in the sense that we've already reported the income and expenses, but we have to report them in the foreign currency, and we have to report them in US dollars, and we have to convert it to US GAAP. So I don't want to get too technical here, but it's just a messy form that's now required to be reported. Of course, now your accounting fees, your tax prep fees go up because we have more work to do, but it's the law.
right.
So,
But this is something that you in your office do for your clients.
yes, and we've been advising all of our clients of the additional costs because of this additional reporting requirement. And
Wow.
it went into effect in 2022. So we've tried to catch up people for 2022. The IRS is not going to go back and penalize you for 18 through 21, but they are enforcing it. They start enforcing it with this last tax season.
Wow. That's so valuable, though. It's, I think half the battle is just kind of being aware, right?
Right, right,
And then being able to ask the questions,
right.
you
Yeah,
know.
again, like we started talking at the beginning, is education is key. I mean, there's just so much that people do not understand, and it's so technical and so complicated. And the penalties are the problem. Most of these international forms, if they are forgotten, if they are late, or if they are done substantially incomplete, and nobody really knows what substantially means. It's a very subjective question, only to be decided by the IRS agent auditing you. The fines are $10,000 per year.
Mm,
And there are amnesty programs you can go into, but if you get a letter from the IRS before you hit the amnesty program, then you're ineligible. So you're facing, so say you have a rental here that you make $3,000 or $4,000 a year, or maybe it's negative because of the depreciation. You lose money on the rental property, but you didn't report it. You could be facing onerous fines for money you never, the risk and reward aren't equal.
right.
So it's really important that people that are either working or doing some kind of transactions in a foreign country, even if they live in the United States, and it's all being done from a foreign country, that they have a good tax person that understands international tax law, and knows what forms they're required to file and prepares them correctly.
Right. Right. Oh my God. Um, Now my head is
Welcome to,
spinning.
welcome to Friday, right?
So, we're coming to year end now. And you've talked about some very serious changes that are happening and things that people should be aware of. Are there any other things that, as I feel like this is kind of the beginning where we start to think about wrapping things up, right?
Right.
Um, is there any advice or things that we should be aware of as we're starting to wrap out our books, as we're starting to think about next year, like how we want to strategize for next year, that we should be aware of? Like, I need to really keep track of, my expenses as it pertains to my rental, my rental property or whatever. Um, that they're really going to have to kind of change some of their habits. Is there
Yeah.
anything that you advise?
Well, I always say records are king. So I highly encourage everyone to get on top of their record keeping. Start thinking now about what's going to happen when you start getting these 1099s from places like PayPal, for example. Are you going to have a problem or not? Um, what about your rental income and expenses? What about we had a hard time last year with people getting their reports from PayPal because if, or I'm not, yeah, I'm sorry, not PayPal, from Airbnb. Airbnb would send the report each rental. So let's say you did 30 rentals, 30 short-term rentals last year, and you didn't keep any of the emails. You didn't keep any of the paperwork. Trying to go back and recreate it after the fact is very time consuming. Either to, get back with PayPal, they're not necessarily motivated to re-give you all of your paperwork that you've lost. Um, Always we're looking at things that you can defer to next year, or income that you can pull into this year. None of that ever really changes. It's more difficult now. Planning is more difficult with the fact that most people don't itemize anymore. So your house payment, your mortgage interest is not so much in play like it used to be. We used to always say prepaid January, or push it to the next year if you can, whichever was to your favor. With no itemized deductions, it's a moot point. But there still are things. There's a lot of things going on in the area of retirement withdrawals, required minimum distributions, um, deferment of tax laws that are in effect that the IRS is being a little more lenient on. I would, if you're in that arena, I would take a look at the Secure Act 2.0. I'm not going to go into the details of that here. It's too cumbersome, but there's a lot of things that the IRS has been changing in that area of how and when you're taxed on. You'll still be taxed, but there's a new 10-year rule on inherited IRAs that is going to become important to people who have inherited IRAs. So I would take a look at that area and make sure that you know the new required minimum distributions, because they've increased the age. So if you're in your 70s, if you're right there between 70 and 72, the rules have changed. So you may not have to take a required minimum distribution where you used to have to be able to take it.
It's a lot.
Yeah, and it's really nothing. I mean, we haven't had a tax reform or a big tax law change since 2017. It's just that one was so big that they're still interpreting and still trying to fix some of the unforeseen byproducts of what that law did. Just like
Right.
the fact that now you have to report on this Form 8858. It's ridiculous, but it's taken them 5 years to tell us what to do.
Right, right. And I think this is where getting a really solid accountant is so key, right? Who
Yeah.
understands your situation, who understands all the nuances and the of, whatever business you're doing, because people are doing all sorts of things now,
Right.
whether it's online business or, or whatnot. And I think
Yeah.
that's really key to have somebody
Yeah.
who's familiar with
A
all of
a
that.
little plug for my firm. So one thing that makes us a little on the unique side is that we are expats. I think we have around 13 preparers right now, and most of us, I think all but two of those preparers, are expats ourselves. We live in foreign countries. We live in Mexico, we live in France, we live in Prague, we live in the Netherlands, and our client base is very large on the expat side. We still, of course, have U.S. residents that we do taxes for that don't have anything foreign in their returns, but those of you that are expats living outside of the country, we've lived it, and we can help you navigate through that strange world of foreign countries, even if it's something like a driver's license or something, a situation happens that has nothing to do with taxes. We don't do immigration work, but we have access to immigration people. We know the laws. We know that if you're a permanent resident in Mexico, you're not allowed to own a U.S. licensed car here. We can coach you on things that we've had experience with. In Mexico, you don't get your utility bill delivered in your mailbox like you do in the United States or online. So when your CFE gets cut off, we can warn you about those kinds of things that you will be learning the hard way once you move to a foreign country.
Exactly. That's so invaluable. Wow, that's so amazing. So as we begin to wrap this up, Cindy, so just like you were saying, so if people want to learn more or learn more about you or reach out to you, how do they find you?
So our website is www.bnctax.com, and it's B like boy, N like Nancy, C like Charlie, tax, TAX.com. We also have a Facebook business page, Facebook/BNC Tax. You can meet all of our staff. If you want to go on the team tab on the Facebook page, it's got a little history of the company, and it's got pretty pictures of all of us, and I believe it has what country we're located in.
That's amazing. Cindy, this has been so invaluable. I can't even begin to thank you so much. For anybody who's out there who's really looking to relocate or has relocated, these are the things that you really need to know. So I'm so grateful to you.
Thank you, Reese. It's always a pleasure to work with you as well and to see your smiling face.
You too.